Hey all, welcome to ShareTreck. It's the 29th of April 2022 and this is a Friday. I have my work cut out for me because I'm trying to come up with a video for each of the companies in our genomics list that is reporting on the 4th and on the 11th in a sequential manner. The first one was for PACB, which I released yesterday. I hope you had a chance to see it. If not, please check it out and let me know what more I can add into it so that I can see if I can accommodate your request in my subsequent videos for other companies that I'm going to work on. Having said that, this is a three-part video. As always, first part is going to be news, headlines, and geopolitical events that are going to impact the market today. The second part is going to be about technical analysis of Nasdaq, Bitcoin, the VIX, and so on. And the third part is going to be a technical analysis of the genomic shares in our watch list with an idea of trying to identify any price action that is potentially possible. It more and more seems to be a moot point these days, especially because of the kind of volatility that we are facing. Yesterday, for example, we had the market dropping sharply and then changing course. So we don't know what's going to happen, but nevertheless, all the more it's essential for us to attempt to validate our technical analysis tools as well as try to get as much of an insight as possible. With that said, let's get started. Before we start off with the headlines, I want to show you a meme that caught my attention almost a couple of weeks ago on Twitter. I think you will enjoy this one. It kind of captures the spirit of the moment. Well, here are today's headlines. Amazon meets top line but takes hit due to Rivian losses. The top line was just a marginal beat for Amazon. They took losses due to Rivian, which was the bulk of their losses, and therefore the share price fell heavily. And in my opinion, their cloud performance was also pretty good overall, and they are a good company. It's an opportunity to buy at dips. And Apple also had sterling performance, but it's given a weak guidance for the next quarter. So that's weighing in a little bit on the share. Again, Apple also is a good candidate. Cloud revenues are key to Google, Amazon, and Microsoft because that's where the future is. And everywhere the cloud revenue has been pretty good. And it's a good opportunity to buy these big tech names under dips. That's what I'm personally thinking of. And I'm actually going to do that. After I finish this video, I'm going to go back and try to see if I can snag myself some Amazon and some Google at a discount. TikTok seems to be eating the ad revenue of most of the tech majors that are operating in the internet ads arena. So that's something that they have to work on to recapture their market. YouTube is already working with the shorts format to try to counter TikTok. It needs to succeed in order to get back its ad revenue. And there is also news of potential battery shortage for EVs, which would mean that EV prices may go up going forward. This is one more element of supply chain which is going to manifest itself. Again, there is no change in any of the risk factors that we have talked in the past with regard to Russia and Ukraine, with regard to China, with regard to Turkey, with regard to Iran. Nothing has changed as such. So those things remain in the background. All these earning blips are all kind of distractions. We'll all come back to the mean again. And when we look at our earnings calendar and see what has happened, we see a very mixed bag. For example, if you look at Coca-Cola, Coca-Cola did very well. When we look at a company like Visa, it did very well. Microsoft did very well. But there are also companies on the flip side which did bad so far. And some of them are in this list which have made a big dent on our outlook. One of them is Alphabet, and also we had Boeing coming up with disappointing results. Meta did pretty well in my opinion, and that has been a positive catalyst. Teladoc was a major disappointment. And on Thursday, Amazon reported the market has, I think, overreacted. There should be a bounce back on Amazon today. Roku did well. Despite the fact that they reported not only bad results but also bad outlook. So probably the pain point or capitulation has taken place in Roku shares, and that's why it is kind of turning back because people expected much worse than what happened and what could happen, and therefore they are buying back into it. That's how I would interpret it. Intel had a bad time at the market post results. And of course, I need to check up what's happened with Gilead. But today we have ExxonMobil, AbbVie, which is a big pharma. We'll watch what's happening with AbbVie. AstraZeneca is also going to report. We got to check that out. And let us see how what the future holds for us. ExxonMobil did very well despite losses in Russia. That shows the strength of the energy segment. At the same time, it comes with a big risk because when it falls, it's going to fall big. So one who is investing in oil shares has got to be very, very careful and decide how much of profit is enough and try to get out of the sector before it starts falling, because the oil chart is weak, as I will show you in the later segment. So that kind of brings me to an end of today's headline. Suffice to say that it's a mixed bag so far. It's very difficult to get a clear outlook, but my thesis still stands in my opinion. I think that we will be volatile for the second quarter, and in the third quarter we'll start picking up. Please ignore this and here, it's a typo. It should be read we will be volatile for second quarter. At the start of third quarter, we'll get some positive guidance when the companies report, and that is going to help the markets to gradually improve in the third quarter. Second quarter guidance is mixed, with many companies reporting weak outlook. IBM had reported a good outlook for second quarter, but most of the other companies are reporting weak outlook. Google and Amazon are a buy at current prices for the long-term investors, in my opinion. Even Microsoft is a buy on dips. Basically, getting into the cloud at discount is the theme out here. And enterprise computing seems to be pretty strong. So this is a very good opportunity to get into these companies, in my opinion. With that, let's go and have a look at all the indices and Bitcoin and gold and everything else that's shiny. I'd like to start off with this particular chart, which shows the relative performance of various sectors. And this green line out here, which is galloping all the way up, is XLE, which is basically energy ETF, which is a proxy for all the energy shares in the market. And it's at a peak of 66.5. Earlier, it had been all the way up to 75%. And there's a very good chance that when this falls, it could take a lot of energy bulls along with it. So if you're investing in energy, just be very, very careful, because the fall could be pretty steep when it happens. The worst performing in this is communication sector, and it's not doing that well. I'd like to start with the futures now. And in futures, we are seeing that the Nasdaq future is down minus 1.26%. That's around 170 points. That's not a good sign. Let's look at indicators and go and take a look at put call ratio. It is still a bearish put call ratio. It's above 1. And then if we look at our 2-year yield curve, we could see that the 2-year yield curve is still going up. When the yield curve comes down, that's when technology and growth stocks start moving up. So right now, this is also a bearish sign. And if we were to look at VIX, VIX has started low but gone up. So that's why we have a green candle out here. This is live VIX for 29th. Today is the 29th, and it has got support from the 9-day exponential moving average. It has a resistance at 32.48. We'll see if we can touch that resistance today. But if we break through that resistance, then the next stop is around 40. So it's going to be pretty devastating for for us if we try to touch the absolute peak that we have not touched for quite a while. So I hope that doesn't happen. And let us take a quick look at QQQ. Pre-market QQQ is down 1.58%, which is also a bearish sign. So overall, the pointers are that the market is going to start bearish. If you look at US oil, it has broken through the diagonal line. The bullish pennant has given rise to a breakout on the upside, and our next resistance is at 107.52. Looking at the MACD and the momentum, I think we are most likely to break through 107.52 before the end of the day for oil, which again means that it's going to be a down day for Nasdaq. However, I come back to my thesis. I think I mentioned it earlier, probably in my last update video. I think that we are now going to start seeing shares which have been severely beaten up, facing seller fatigue, capitulation of the seller, and those shares will start turning around. One of the first examples that I have seen is that of Roku. Despite a bad performance and bad outlook, it's still going up. So that could be a hint that probably that hypothesis is correct. So we'll have to wait and watch, especially for our biotech shares. The ones that are really severely beaten up are most likely to turn positive despite bad news, because I think we are very close to capitulation. But when compared to my other thesis that second quarter is going to be bad and third quarter is when things will start improving, I would posit that we are going to move sideways, a few days up and a few days down, and that's likely to happen until we get fresh guidance at the end of the second quarter. When companies say that the third quarter is going to look better, that's when things will start improving. With that said, let's go and have a quick look at our crypto sector. And in crypto, we are going to look at Bitcoin. Bitcoin is still struggling to get into the bullish channel that it was in before. The support line for the earlier bullish channel is now performing a resistance, and it has successfully kept us below, and also the 9-day exponential moving average is constraining us. The MACD is bearish but tending towards the signal line, but momentum is telling a different story. So Bitcoin, in sympathy with Nasdaq, is likely to be bearish today. When we look at gold, it's pointing to a resistance of 1920, and 9-day exponential moving average as well as the 50-day exponential moving average are being the constraints. So we'll have to see how gold responds today. If it breaks through, then it's going to go back into the earlier channel within which it was bouncing between 1984 and 1920. Otherwise, it's likely to come back to test the support at 1871.01. The MACD is bearish but tending towards the signal line, but the momentum is indicating that we are most likely to push upwards and break through this 1920 resistance, horizontal resistance of 1920. We'll see how it turns out. With that, let's go and have a look at our genomic shares. Okay, here we are with our biotech shares. The market is already open. It is 9:34, and you see a sea of green out here, which is very nice to look at. And we have a mixed story out here. AstraZeneca Q1 results exceeded Wall Street expectations. The average estimate of 4 analysts surveyed by Zacks Investment Research was for earnings of 86 cents per share. Against that, they came up with 95 cents per share. So that's a good news story. However, AbbVie has a bad day. The company reported adjusted profit of 3.16 per share on 13.54 billion in sales. On average, analysts polled by FactSet expected AbbVie to earn 3.14. So they earned more than what was expected, and they came below sales target of 13.66 marginally. They came up with 13.54 billion. So it's a mixed kind of a bag out here. And also we have to remember capitulation. If any of these shares have reached capitulation where they have fallen as low as they could ever. For example, if you look at Verve, they are at the very bottom. So that could probably explain the bit of green. Again, with my third quarter pickup thesis, I think we should be moving sideways. So a day of up and a day of down, probably. And that's what I would think it would be. It's kind of a moot point going through each of these shares because the volatility is going to determine which way it's going. The indicators are mixed. So we'll just look at IBB to begin with. And IBB has gained 0.81%. So overall, there seems to be some kind of a positive bias for the biotech sector, and that could rub off on genomics. And if we look at our MACD out here, it's tending towards the signal line. It's bearish, but momentum is picking up sharply. So there seems to be some influx of money into the biotech sector. If you look at TDOC, after the fall it had, it seems Kathy Wood bought more shares of, I think, 10 or $20 million worth of shares more on TDOC after it fell. So it's fallen sharply, and we need to fill up this gap. So there could be a movement upward after such a sharp fall. But what happens in future, we'll have to wait and see, because all the indicators out here are at the rock bottom. So there has got to be a dead cat bounce out there. So there'll be a movement back to try to come back into above 30% as far as the RSI is concerned. So those forces are at work But TDOC has definitely reported a weak outlook and higher cost for sales. So we'll have to wait for their next earnings release before we can say that it's going to go up. But Kathy Wood has got great confidence. She has put money into this. So it's a bit illogical at this point of time. Whatever rationale I have for evaluating these shares, things are not fitting into it. And in the wider market also, many commentators are finding it difficult to read the tea leaves and predict where things might go. So at this point of time, my advice would be to just stay off the market. If there are really high conviction stocks, like I'm looking at Google right now, I'm looking at Amazon, those companies are established. I have got a high conviction on them. And I would go and do a bit of dollar cost averaging here to buy the dip here in Google and also in Amazon. So where is our Amazon out here? Here it is. So these two, Amazon is down 11% and Google has dropped quite a bit from its peak. And if I look at Microsoft, again, I see some opportunities there. If Microsoft comes down further, then I would take a bite. But right now it's Google and Amazon for me. Apple is also a pretty good buy if it falls further. But that's where I'm today. So stay away from the market is my recommendation. These are, of course, my personal opinion. Do your own due diligence before investing in shares. With that, I would like to bring this session to an end. If you like this video, please press a like. If you haven't subscribed, please subscribe. It's absolutely free, nothing to lose. Join our community. Thanks and have a great day. Bye for now.